Markets are mixed right now after a broad sell-off yesterday. You have the U.S. market struggling to find its footing. The TSX, though, is managing just fine. We are surging under the hood. There's a bit of a risk-on tone with energy stocks and base metal stocks moving higher, as well as some participation from tech. And we've got a lot going on here in Canada, whether it's a major deal in the financial sector with RBC buying HSBC Canada, or Suncor not giving in to activist pressure when it comes to selling its gas stations. Let's bring in Art Hogan, Chief Market Strategist at B. Riley Financial. Art, always a pleasure to have you. You know, normally we talk about the Fed and economic data and how that's all going to play in, but now we have the luxury to talk about other things, at least to start. And the RBC, the HSBC deal, I wonder how you're looking at it and whether you think M&A in this kind of market is going to be perhaps a little bit more of a prevalent factor for investors.
Yeah, it's such a great question. And when we think about M&A, we certainly think that there's going to be more of it, not less of it, as we end this year and head into next year. I think part of that, if you look at the HSBC RBC deal, really makes sense, right? It was a set of assets that RBC actually got at a pretty favorable price that they likely can do a better job of managing. So I think that when you see assets that are trading at valuations or companies that are willing to trade assets at a valuation that is likely to be accretive to the buyer in the short order, especially if that buyer, like in the case of RBC, has the ability to actually optimize those assets. I think we're going to see a lot of that, and especially in some of those really beaten up technology names. I think across the board, when we've seen the multiple degradation that we've seen in all sorts of technology names, there's likely to be some of those incumbents that will see some of these disruptors as being cheap enough to buy now, as opposed to building some of the new technology. So I think M&A is going to be the hot button topic, not just for the rest of this year, but well into 2023.
And I want to kind of underline the point that you seem to be making, that the kind of M&A will be strategic. It will be businesses buying other businesses rather than perhaps what we've seen more recently is private equity or venture capital, big funds, financial buyers here.
Yeah, private equity is in a pretty difficult position right now with the cost of capital being higher and having made a lot of acquisitions in a very low interest rate environment. So they may be some of the sellers at accretive or attractive valuations. It's certainly, as Warren Buffett, has been known for saying, when the tide goes out, you can find out who's been swimming naked. We're going to find that out in a lot of venture capital and private equity type investments that probably made sense as long duration investments in a lower interest rate environment. I think that's one of the drivers. It's certainly one of the drivers in the public markets for why we've seen so much multiple contraction. So I think that the strategic piece of this is there are companies that are out there that can likely disrupt some incumbents. And I think incumbents have to make the decision, the economic decision, what makes more sense for me to build this in-house and spend a lot of time and money on that, or to actually take over some of these distressed assets and build them internally and optimize them.
And on Suncor, kind of a special situation there where you had an activist investor. It was hard to be an activist investor when everything's going down, right? Because you could do all the things you want, but when the market's in a bad mood, it doesn't really matter. And I wonder, with this little bit of perk up that we've seen since October, if we're also going to see activist investors feel like, okay, now I can strike.
Yeah, I think that makes sense. Elliott got into Suncor and really wasn't happy with or agitating for some change in their operations. And one of the first things that Mike Wilson had to look at intentionally was, what do we do with our gas stations? And the board made a decision that the reality was we would likely make these gas stations more profitable if we tried to find other adjacent businesses to them. So things like not just serving confectionaries and fast product, but actually opening quick serve restaurant type options. So the problem with an Elliott coming in and saying, hey, the multiple on these is dragging down the multiple on Suncor. The multiple on typical gas stations is lower than a Suncor would have a multiple attributed to it. So they had to make the hard decision and say, we can actually make these businesses more valuable, and was able to fend off, at least for the time being, that activist investor, and likely in the long run will be the right decision to make.
That's a good point. I would like to turn our attention back to the broader markets. Excuse me. Because I always kind of shake my head when the market is rallying on these China headlines, and this hope if I can call it that they're going to somehow abandon their zero COVID policies. It's hard for me to understand why they're going down this path, and maybe you do, maybe you have an answer to that question. But what do you think of that China effect on the broader market? Because it's proved to be very volatile as investors really try and squint to see, okay, maybe they are going to do something different than what they're actually doing.
Right. Yeah, we've gotten some head fakes on that. Just remember 2 weeks ago, they talked about easing some of the standards with which they're dealing with new cases, pulling back on the number of days that you have to stay inside, et cetera. But those were baby steps as compared to China actually adopting a vaccine regimen that works, right, and developing an mRNA vaccine that works, as opposed to just locking down provinces and cities that measure themselves in tens of millions of people. So what they've been doing, and this is the third year. Remember, this was 3 years ago that COVID was discovered in Hunan, and they're still trying to sort of repeat that process that hasn't worked yet. So I don't think anything of note is going to change in the China zero COVID policy, at least until we get through March. That's when they have their major conference and make all their decisions, because I think the decisions being made at the top in China aren't being made on a professional or economic basis. They're being made on a how do I stay in power basis. And I think unless and until that changes, it's going to be very difficult for President Xi to shift gears here and say, hey, what we've been doing doesn't work. So I think the only real hope that we have of China reopening in earnest is for them to adopt modern vaccines that work and use current modern therapeutics that work. They still have some time before that gets developed in country, and they've obviously proven that they don't want to use the ones the rest of the globe has been using.
Art,